Good morning. Welcome to The Street on BNN Bloomberg. I'm Matt Scooby. It is Monday, November 24th. Here are some of the stories that we're tracking for you in the BNN Bloomberg newsroom. Canada and India have agreed to resume bilateral trade talks. The announcement coming this weekend after a meeting between Prime Minister Mark Carney and Indian Prime Minister Narendra Modi on the sidelines of the G20 summit in South Africa. The leaders are aiming to reach $50 billion in bilateral trade by the year 2030. The two countries exchanged about $31 billion in goods and services last year. The Prime Minister has also agreed to intensify free trade talks with the South American trade bloc Mercosur. Carney met with Brazil's president during the G20 summit as well. Ottawa claims bilateral trade with Mercosur is a significant opportunity for Canada's economy in sectors like industrial goods, chemicals, forestry, and seafood. Mercosur has a combined GDP of over $4 trillion. And now our top line story, some more drama in the mining sector. The world's largest listed mining company, BHP, has walked away from their most recent takeover approach of rival Anglo American. BHP confirming today that it had preliminary discussions with Anglo after Bloomberg reported yesterday that BHP had made another approach late last week. According to people familiar with the deal, Anglo rejected that proposal. Now the move comes 2 weeks ahead of Anglo and Canada's Teck Resources shareholders voting on a $60 billion merger. Well, for more on this, Bloomberg's Paul Allen Hunt reports on the Asia trade.
Copper is key to the energy transition, it's key to electrification, and it's key in the rise of data centres and things like that. So this is an area that BHP really sees growth in. It sees growth in two assets, in two areas or two commodities, that is potash and copper, the red metal. So it's all about copper. The other thing is that the copper universe is quite small. So if we look at copper major copper stocks, they're pretty rare. Projects of the size that Anglo have and the quality that Anglo have are really hard to come by. And finding new copper deposits is just getting harder and harder, and they're becoming harder to mine. So BHP is looking around. It identified Anglo last year as a beautiful target that it really wanted to make a deal with. However, that didn't happen. Now Anglo and Teck have made an agreement to merge together or to have a deal of their own, and BHP pretty much saw time running out as a shareholder vote between Anglo and Teck Resources comes to the fore in a few weeks.
Why couldn't BHP do better if they really need Anglo?
Well, this is it. It was never going to be easy. It certainly wasn't going to be easy last year, and it wasn't going to be easy this time. We don't have a lot of detail. I will say that at this point. We only broke it last night, of course, this story, but we do know that it was scrip or shares and cash. The premium that BHP would have had to have offered to get a real serious recognition from Anglo and have a proper discussion would have been significantly higher. So when Anglo rejected BHP or rebuffed BHP last year, it went on to divest some of its non-core assets, to simplify its business, and shareholders rewarded Anglo by sending the share price higher. So BHP really would have had to have offered a significant premium. Then there's also some of the other issues that we saw last year. So antitrust, they would have had to have won over regulators in South Africa, and copper stocks generally have been trading higher. So those are a few of the many challenges that BHP would have had to have embarked on, and that's not even starting on China antitrust or some of the other issues.
That was Bloomberg's Paul Allen Hunt. Well, coming up next, we'll get a deeper insight into the United Arab Emirates investing billions into Canada's tech and energy industries. Stay with us for that. Well, let's have a look at how things are shaping up on the markets here on this Monday. Let's start with U.S. future stocks attempting to build on that strong rebound. It started Friday after Wall Street was buoyed by renewed hope for an interest rate cut by the Fed coming in December. So things, again, looking good so far for the U.S. futures market. Look at that in the NASDAQ. Could be 220 points. Let's check on how major Asian markets finished the day today. Markets in Japan were closed for a holiday, while Hong Kong's Hang Seng was up 2%. It got a boost from a 4.7% gain for e-commerce giant Alibaba. It reported strong demand for its updated Qwen AI app, again, up nearly 500 points and 2% on the day today. Let's go to Europe, where things in the major indexes, some small gains for the most part. The things still right now, Germany's DAX, again, the biggest mover so far, up half a percentage point on the day. Let's take a look at where the TSX finished the day on Friday. Broad-based gains pushing the country's main stock index higher. It was up 254 points, closing at 30,160. The TSX is up close to 22% this year alone. Let's have a look at some of the biggest winners and losers, too, from Friday on the TSX Composite Index. From a percentage standpoint, Curleaf and TFI International, the biggest movers. Curleaf up almost 10%. Losers, though, on the day on Friday to end last week, Northland Power and Skeena Resources. Skeena Resources down more than 4.5% to end the trading week last week. Let's have a look at metals, shall we? The price of gold, that's been one of the drivers of the TSX this year. Again, down slightly. Gold futures here this morning, 0.1% and down a few, down to $4,111 an ounce. The price of silver also, again, just off slightly, same with copper, not looking at much movement despite the news in the mining industry here this morning. Oil, when it comes to oil, Western Canadian Select off slightly, just down to close to 2% here in pre-market trading. Again, on a percentage point, 45.34 a barrel right now. Crude oil, too. Keep in mind, now the price of oil did dip Friday because of the sanctions, those new ones on Russian oil. But the price of crude up, again, slightly here in pre-market trading on this Monday. The United Arab Emirates has committed to investing $70 billion in Canada. The investment will be vital in vital sectors, including energy, artificial intelligence, logistics, and mining. That announcement comes on the heels of Prime Minister Mark Carney's visit to Abu Dhabi. We'll get more on this from John Manley, former finance minister and senior advisor at Bennett Jones, chairman at Jefferies Canada.
I was just in the UAE in September in my Jefferies role, and we were visiting with a lot of the major investment firms, the sovereign wealth firms in the UAE. We did a deal. As you may know, at Jefferies, we acted for Mubadala, which is one of the big sovereign wealth firms in their take private transaction of CI Financial, which was over roughly a $5 billion deal. And so there's more where that came from, I'd say. And oh, by the way, I'd say that one of the things that I picked up in the course of my visit there was that Mark Carney personally was very well known in the UAE because he had been there frequently in his Brookfield role. And so he left a lot of footprints and was very well thought of by the investment community in the UAE.
It's sort of a complex place to do business with, John, isn't it? Because the New Yorker just had a piece about Daniel Kinahan, who's a major Irish drug dealer. He heads up a $1 billion coke empire, and he has found sanctuary in the UAE, along with some other drug dealers. Now, apparently the UAE is trying to kick them out, but these fellows were allowed to just live there as long as they didn't commit crimes in the Emirates. So it's a very different kind of society and government there.
Well, there's no doubt about that. It's not a democracy. But truthfully, we know that how reliant Canada and its economy are on trade and inbound investment. And if we're only going to do business with like-minded countries, democracies with liberal values, we're not going to be doing business with very many players in the world. So we have to balance our interests and our values in order to make sure that that we continue to build the kind of prosperity that enables our people to have the life that they want to have and continue to support our values.
I mean, you're so right. We can't always do business with Western democracies. I'd love to get your take as a former finance minister. You know a bit about financing arms spending. What do you think? It'd be hard to draw you on this, but do you think Mr. Carney will go with some Swedish fighter jets as well as the F-35?
I think it's going to be a tough call because the advice that he will receive, having been around the table when we've done these big procurements, is that it's not usually a good idea to have different kinds of equipment. That, you know, it's more complicated from a training point of view. It's more complicated from a maintenance point of view, and there are obviously going to be capability differences between the F-35 and the Saab aircraft that are, you know, may dictate what's available for particular missions. So he's going to get a lot of pushback on it. On the other hand, we know that we're trying to build an alternate economy here to the one that we've relied upon for 40 years. It's going to require us to do some things that that kind of break the mold a little bit. And, you know, would that we had continued to produce the Avro Arrow in the 1950s, we might have been the ones that were offering these contracts to others, but we didn't. And now we've got to rebuild. So I'd say this is going to be one of the tough calls for his government to make, and it's a lot of money, Andrew.
Yeah, it is a tough one, and obviously the Americans would be irate if we were to cut back on the F-35 purchases. You've been around a lot of government blueprints and plans as well. Did anything jump out for you with the announcement of those infrastructure projects that the government is leaning towards favouring? I don't know if they've fully been adopted by the Major Projects Office.
Well, I think that, first of all, I think it's a good sign that the government's actually talking about promoting getting things done. I mean, one of our problems over the last number of years is an inability to get things done. And so I think this is a really positive signal. I think it's also important to remember, and I don't think a lot of listeners to the budget paid attention to this, but the investments that are government-driven and the so-called capital account deficit is all based upon matching or more funding from the private sector. So what they're trying to do is, we could put it this way, is to crowd in private sector investment. That's a very important and powerful thing. But the big thing to me is, let's get some things done. Let's put some check marks on the board and show that we're not going to bog ourselves down in regulatory red tape. We're actually going to build things that are important and that last.
That's John Manley, former finance minister and senior advisor at Bennett Jones and chairman at Jefferies Canada. Well, up next, oil prices were sliding on Friday following U.S. sanctions on Russian oil. We'll dig deeper into that after the break. On Friday, oil prices were down as the market appeared to be focused more on the potential peace deal between Ukraine and Russia rather than on the new sanctions against Russian crude that took effect on Friday. To discuss this further, we spoke to Brian Kessens, Senior Portfolio Manager at Tortoise Capital.
I do think that the market right now is focused on what's going on with Russia and Ukraine, specifically kind of two edges to that sword, right? One, you have the U.S. Putting potentially higher sanctions or more sanctions on specifically two Russian companies, Lukoil and Rosneft today. We'll see how much those sanctions are actually enforced. But that's one. And then obviously over the weekend or even over the past week, a lot of sources are indicating that Ukraine and the U.S. along with the Europeans and the Russians obviously are working towards some sort of a peace deal. So that's kind of the yin and yang of what's pushing oil around this week.
We do keep hearing from oil market observers that despite sanctions, Russian oil is likely to go on filtering through onto the global market.
Yeah, I think that's definitely the case, even if the sanctions are even higher. I think that the barrels will ultimately find a home that may not be at the price that the Russians or the Lukoils of the world would like, but I think that those supplies will find somewhere. It's essentially just how low do those actually have to price before someone actually will take a risk on it, or secondly, we do know of a lot of ship-to-ship transfers that happen in the middle of the ocean, where there's not a lot of oversight, if you will, and then those barrels can be cleansed, if you will, to make it to more open markets.
Are we seeing, I mean, is the future structure right now bearish in the oil market? Is it pointing to amply available supply?
It is, and it's partly due to the actions of OPEC Plus that started on April 2nd earlier this year, where OPEC Plus was curtailing a little over 2 million barrels per day, and then they've been accelerating bringing those barrels back over the course of this year, to the point now where we're fairly adequately supplied relative to demand. We still do see demand increasing by 1 million barrels per day this year, and likely another 1 million plus next year. But the supply is more than enough to meet current levels of demand. So that I do think that the direction of travel over the near, maybe even the medium term into the start of next year is more bearish.
More bearish. Could oil get down to around $50, do you think?
I think that's possible. I think if we got to $50, I think it would be relatively short term. I think you would see OPEC step in and potentially curtail more barrels, and or you see a lot of non-OPEC producers say, you know, we're going to curtail barrels and wait for a better price.
What would be your favorite way of playing oil right now? Do you guys buy equities on Tortoise? Can you just remind us?
We do, yeah. We're nearly solely focused on buying public equities across the entire energy value chain. Yeah. To your question, you know, what would be the best way to express something if you happen to be bullish on oil? If you look at where the oil field service companies are trading, where they have traded so far this year, they are by far and away the cheapest, and they are arguably the most levered to the overall oil price. Names like a Schlumberger or a Halliburton would be included in that bucket.
It is remarkable how people are buying the oil sands stocks. Maybe we could put up a 5-year chart for Suncor, SU, or Imperial Oil. I mean, a lot of support for those stocks right now.
Yeah, I think particularly on the Canadian side, there is a view that over the longer term, the Canadians have some of the lowest cost reserves across the world. It's those production volumes are going to increasingly grow. And then one of the challenge for the Canadian producers historically has always been, you know, what is the market? How are they actually going to get those barrels to the U.S. market, essentially? But you've got some of the larger crude oil pipelines, notably Enbridge in Canada. South Bow would be another one. And then you've got Trans Mountain that actually can take barrels to the west coast of Canada for export to Asia. So the options of export are only growing for the Canadian producers.
Yeah, and Enbridge stock has been rising rapidly, down a little bit today. When you look at your energy portfolio, can you generalize? Do you like natural gas exposure right now in North America or oil?
Yeah, right now, you know, I did say over the short, medium term, we're a little bearish oil. That's not the case for natural gas. Natural gas is largely weather driven, and we are starting to get into that colder weather, obviously, as winter approaches. So over the short term, we can see natural gas potentially spike. And then even over the short, medium, and longer term, just as it relates to North American natural gas, there's increasing demand for that. One, internationally in the form of liquefied natural gas. And North America overall is looking to double its overall export of LNG volumes just over the next several years. And then secondly, domestically and across all of North America, we have data centers, and they are increasingly power hungry. And our view is that the vast majority of the power generation that's going to power data centers is going to be supplied by natural gas. So we're very bullish on the natural gas side of things.
That's Brian Kessin, Senior Portfolio Manager at Tortoise Capital. Well, still ahead, Canva COO and co-founder Cliff Obrecht, and today's top headlines from the BNN Bloomberg newsroom. Stay with us. Canada and India have agreed to resume bilateral trade talks. The announcement coming this weekend after a meeting between Prime Minister Mark Carney and Indian Prime Minister Narendra Modi on the sidelines of the G20 summit in South Africa. The leaders looking to reach $50 billion US in bilateral trade by 2030. The two countries exchanged about $31 billion in goods and services last year. Ontario has designated energy provider Hydro One to develop a new transmission line in partnership with First Nation communities. First Nations will have an opportunity to invest 50% equity in the line through the First Nation 50-50 equity partnership model. The province's Minister of Energy and Mines advised the Ontario Energy Board to develop a new transmission line between Bowmanville and the Greater Toronto area. And shares of Alibaba are gaining in the pre-market after the company said its revamped AI tool hit 10 million downloads in the first week of being open to the public. The company made the announcement in a post on the communication app WeChat. The app is set to incorporate functions that include e-commerce and are said to be a rival to ChatGPT. Let's have a quick check, too, on the futures here. About an hour, just a little over an hour away from the market's opening. So far, things looking to continue that strong rebound from Friday. A volatile week last week and a short week this week with American Thanksgiving on Thursday. But so far, in south of the border, things looking positive to start the day. Well, Canva's COO and co-founder Cliff Obrecht joined Caroline Hyde from Bloomberg Tech to discuss the digital graphic design company's product rollouts and how it's been building out its leadership as it prepares to go public in the near future. Have a listen.
We've been absolutely blown away by the level of uptake. It probably really speaks to the creative community screaming out for choice and us delivering on it. But yeah, we've been absolutely blown away with the pickup so far.
Affinity is about professional design in many ways. But how are you seeing being adopted more broadly? And who is it that really wants to lean into this type of sophistication?
So Canva is a design tool, and when we launched Canva, there were only professional design tools. So we launched Canva to enable the 90 to 99% of the world who couldn't design to be able to design and express their creativity. And what we did with the acquisition of Affinity, we acquired that company and we just launched it 100% for free. And that really gives creative freedom and the ability to create and design to the other 1 to 10% of the organisation. So now we have both professional designers and everyone else able to design for free and with ease and not let the tools or cost get in the way of people achieving their goals through visual communication.
Look, I'm looking at some analysis that was put out. One analyst calling it from a visual suite to a comprehensive creative operating system. They say that it launches Canva into beyond the tool for simple graphics and to challenge Adobe's long-standing market dominance. Is that what you're doing? You're challenging Adobe here?
I think we really just think about how do we help organisations achieve their visual communication goals? How do we... People don't wake up in the morning wanting to create a social media graphic or wanting to create a presentation. They wake up wanting to achieve a goal, whether that's a small business trying to raise money, whether that's a large organisation trying to win more customers or deploy great marketing content to grow their business and revenue. We're really in the business of helping businesses achieve their goals, and that's quite a complex process in a large organisation to create on-brand content at scale. And we really have connected all of that complexity through the creative operating system and help businesses deliver on that promise.
The promise is being borne out with the statistics and the money that rolls in, $3.5 billion in terms of annual revenue, users 260 million, you've been profitable for 8 years. All of this seems to hint that you're on the path to becoming a public company. Is that right, Cliff?
Yeah, it's probably imminent in the next couple of years, that's for sure.
Imminent, and what, therefore, do you need to streamline before that? How much are you thinking about your talent? I know you've done a raise where you're able to offer liquidity to those that have been working with you, but how are you able to get the right talent in the door and retain them at this moment?
I mean, Canva is one of the fastest growing companies in the world right now, and so that helps. It's a great product solving real problems for customers and delivering lots and lots of value. So people are excited to work at a company that really helping, that company that is helping their customers achieve their goals and is delivering on that success and is growing fast. And we've hired an incredible leadership team over the last, since the start of Canva, and a lot of our leaders have been with us for 8+ years, but we have also brought in a really great C-suite of folks like our CFO Kelly, who came from Zoom, and a bunch of others to really sort of pad out that leadership muscle in the lead up to an IPO and beyond.
You are really augmented by AI in many ways, but some would say that OpenAI is a key competitor of yours. How do you see that with Sora? How do you see innovation as your lifeblood?
OpenAI are an absolutely fantastic partner of ours, and you can even start a design within ChatGPT now. So if you're creating a presentation outline, you can simply say, can I please have that as a Canva design? And it will give you that Canva design straight into ChatGPT. And then you can click through to Canva for the final mile of editing, collaboration, deployment, and then understanding how that content actually performs in the wild. So we have an absolutely fantastic partnership with OpenAI, and we really build the tools around the models like Sora. So in order to create a video, there's a lot more than just prompt to short clip. You need to create character consistency, audio. There's so much more. So we really create that end-to-end workflow that enables video creation, design creation, and now we're the first company in the world that's launched a layered design model. That really generates a Canva design that you can edit straight away, rather than having to, every time you make a change, redesign or recreate that image or piece of content.
That was Canva COO and co-founder Cliff Obrecht. Well, coming up, hot picks. There may be some opportunities in the gaming and leisure sector. Stay with us for that conversation. Well, time now for Hot Picks. On Friday, we zeroed in on 3 plays in gaming and leisure from James Hardiman, Senior Vice President and Leisure Analyst at Citi. We kicked things off with Wynn, his top pick. They are a leading developer of luxury casino resorts.
The real thought behind Wynn is that they are, a premium operator of premium properties that target premium customers. And so much of what can explain what we've seen in our sort of consumer discretionary coverage in recent years has been the idea of this K-shaped economy, right? And I get the question from investors all the time, what are the best equipped companies to navigate such a divergence between the high end and the low end? And I think Wynn is at the forefront of their ability to do that. As we think about the Las Vegas Strip, right, which is where they have one of their main properties. It was a rough summer on the Strip, but it was primarily those sort of middle income, value-oriented properties that really struggled over the summer, whereas Wynn's properties did quite well. And so they've got exposure to a recovering Vegas, but they're also in pretty good shape as we sit here today. And then as I think about their Macau business, Macau, China, where they have a couple of properties, that's actually a market that's outperformed expectations this year, and there's some real opportunities for Wynn to gain share there in the months to come. And then I guess the last, please.
No, sorry, go ahead. No, go ahead. Go ahead. I'll jump in after.
The last point I was going to make, there's some idiosyncratic. So as you'll see with all these top picks, like these are companies that have exposures to trends that we think are favorable, or a lack of exposure to trends that we see are being unfavorable. But then in addition to that, there are some idiosyncratic factors, right? Company-specific factors. And for Wynn, that's the fact that they're going to be opening the first casino in the Middle East, right? They're going to be opening what's called Wynn Al Marjan in the UAE in 2027, and that's a big opportunity for them.
I was just looking with the China, you mentioned Macau, and they even have a wine award. Like, so they're looking at different opportunities, right?
That's right. That's right. As you think about that premium customer and what they care about and what's going to move the needle for them, I think for decades, Wynn has had their hand on the pulse of that customer, and that is really paying dividends in the current environment.
Now, any concerns about it being hit by any potential downturn with the markets?
Yeah, look, I mean, they are at the end of the day a consumer company, and so if we see sort of broader recession, I think everything that I cover, which again is consumer discretionary, in a lot of cases, big ticket consumer discretionary is going to get hit. But as you think about sort of what my job is and a lot of my counterparts' jobs are, is it's picking relative winners and losers. Okay. And so as we think about their particular exposures, right, the customers that they're targeting in, that's a customer that's going to outperform. All right,
I want to get the other two in that you want to talk about. Carnival as well. It looks like the cruise lines are back.
Yeah, I've been back and better than ever. And you know, who would have guessed that a handful of years ago when we were coming out of COVID and it felt like COVID was the really existential threat to the cruise industry, because so many people Absolutely. That I talked to, they were already, I think, weary of going on a cruise. You know, you're hearing, I would never go on one of those things. And it is cruise consideration today is actually 50% higher than it was in 2019. Take a moment to take that in.
Yeah.
You know, you were looking at 6 in 10 Americans that would consider taking a cruise in 2019, and that's more like 9 in 10 today. Now, the actual penetration is way less than that, and therein lies the opportunity, right? That people are considering it. Getting them across the finish line is certainly a big opportunity. And Carnival, you know, again, they've got exposure to a cruise industry that we think has a lot of secular tailwinds. But then in addition to that, they've got some company-specific initiatives. Most notably, they just opened their own private island destination called Celebration Key. 2026 will be a year, and the first full year that they're going to have that island open, which brings with it a whole lot of benefits as you think about consumers' interest in going on their particular cruises and going to their particular destinations. So really compelling story there as well.
So I'm curious, that from 6 in 10 to 9 in 10, is it that saying there's no such thing as bad publicity? The pandemic scared everybody about it, but it also raised awareness of it.
No, I mean, I think that was definitely bad. You know, the concern that you were going to get stuck on a cruise ship and or catch some communicable disease. I would make that small exception for that press being bad press. No, I think the cruise industry has gotten better in terms of the product that it delivers. Part of that is these incremental offerings, these land-based islands, most notably Royal Caribbean opened what's called Perfect Day at Coco Cay, which has been an absolute home run. All of these things have happened at a time when I think traditional vacations, land-based vacations, have arguably gotten worse, right? They're more expensive, right? Hotels are more expensive, and in a lot of cases, service levels have gone down because as these hotels have had to deal with higher labor costs, they've cut back on staff and service.
Right. I'm going to jump in because I just want to get in the last one. BRP. Yeah, sorry, we've been talking a little too much. My apologies. Canadian manufacturers, snowmobiles, off-road vehicles, boats, one of my faves. What do you like about it?
Yeah. Great company, great management team. Although you know the longtime CEO is stepping down, and they're in the midst of a CEO search. It's a segment that seems like it's gaining steam really over the summer, right? Off-road vehicles, but then it's a company that we think if there's going to be a share gainer in this space over time, it's going to be them, right? Great sort of engineering-based company that makes great products that we think will ultimately be a share winner.
That was James Hardiman, Senior Vice President and Leisure Analyst at Citi. Well, still ahead, today's market drivers, Bloomberg's Divya Balji will join us. Well, for a look at some early market movers, we are joined now by Bloomberg's Divya Balji. She is managing editor for breaking news in the Americas. Good morning, Divya.
Hi, good morning.
Let's get into it, shall we? Barrick getting an upgrade, and not just one, it's gotten a number of upgrades here recently. Take us through some of the reasoning for that.
Yeah, so BofA has upgraded Barrick to a buy equivalent rating from a hold equivalent rating. You know, they're basically pointing to two specific things. One is that its valuation is quite strong now in comparison to its peers. The other is also the fact that there's just rising gold prices in the current macroeconomic environment that they're in. And they go on to explain a little bit about how they have been actually quite focused on cost, on improving their margins. So that's also helping. One of the other things that they brought up was the fact that, Barrick has sort of made this strategic decision to focus on more developed markets as opposed to emerging markets in terms of the assets and where their assets are based and where they're actually looking at production. In particular, they refer to the Nevada asset as being one of those better primed assets for the company, and that's really the reason behind this. BofA also seems to think that the price of gold will continue to rise, and that will continue to help Barrick. So quite a few good, solid reasons there for that upgrade by BofA.
And again, gold up in the pre-market, at least here so far. Other interesting, Novo Nordisk's shares plunging after its Ozempic pill fails in its Alzheimer's effort. This was interesting because this trial, it felt like a long shot at best, but it did take a significant hit so far.
Yeah, that's right. I mean, when you listen to what investors have to say, essentially this is not something that a lot of investors had a lot of hope about. But still, I think a lot of them saw it as a possible lottery ticket. I think that's how someone actually phrased it. And it probably is the right way to see it. Novo has really been hurting quite a bit. Eli Lilly has come out as its main rival when it comes to the weight loss drugs that they both have. And Eli Lilly seems to be actually taking market share away from Novo Nordisk. Now, this specific trial where they were giving out these Ozempic pills to see if it could slow down the progression of Alzheimer's in patients would actually be helpful. But in the trials that they've done, they actually haven't seen that progression slow down at all. Now, again, it's just like what you said, this was supposed to be a high-risk trial, not much hope there, but people still thought, something could come of it. And that's really what's hurting the stock. The fact that they have massive competition from Eli Lilly and this one last hope that they might have had for their Ozempic drug is not working so much or so well. Now, one of the other things with this is, could there be another trial where it looks at people who don't have Alzheimer's yet, but are in that group that could possibly get it? And could it slow that down? I think there's still a lot of questions out there. But again, it's just one of those things where I don't think people were expecting it to get that far. And unfortunately, it hasn't at this point.
But are you surprised it took such a big hit as a result of that? The hope wasn't high, and clearly you're hedging on the fact that it might happen. And where, as you said, they're giving up some market share right now. You mentioned the Eli Lilly. The concerns for investors now even still moving forward?
Yeah, I think ultimately it comes down to no matter what, even if it was seen as a lottery ticket, even if it was something that people hadn't put a lot of expectations on, as you can see from the sell-off today, this was like that one last thing that maybe investors were banking on to see this pill or this drug actually advance and take on a little bit more market share. And I think that's what the market's reacting to right now. It's possible that it's just a big sell-off today and then things progress tomorrow a little bit. Typically we tend to see these things pop up even when it's something that's pretty much expected news, and then you just see this big sell-off. But ultimately, what's next for Novo Nordisk? I don't think we actually have a good idea of that. There is a new CEO in place. What is he going to look at? I think those are the types of things investors really want answers to right now.
Yeah, will certainly be interesting. Bloomberg's Divya Balji for us this morning. Thank you for this, Divya. Let's take a look at some of the notable analyst calls and recommendations. And today it's European automakers Ferrari, BMW, and Mercedes-Benz, who are initiated with buy recommendations at Goldman Sachs, while giving neutral ratings to Volkswagen, Stellantis, Renault, Porsche, and Aston Martin. Goldman Sachs, these are, quote, tumultuous times for European auto OEMs. Analysts led by Christian Frenez say Mercedes and BMW offer healthy balance sheets, cash flows, and shareholder-friendly capital allocation frameworks, and tailwinds from compelling product lineups, as well as relative ability to position themselves against Chinese competition. Now, here's where the stock chart did for how BMW did over the past year or two. Ferrari has a buy recommendation as they expect larger volumes of higher-priced special series vehicles to pave the way for beats versus current consensus estimates. Volkswagen and Stellantis get a neutral rating as these mass-market vehicle makers are expected to face more challenging headwinds than premium peers. And here's what Stellantis its chart looks like over the past year or two. Porsche getting neutral. Analysts expect further upgrades to current consensus EPS estimates to be constrained by near-term tariff headwinds, restructuring costs, and absence of meaningful recovery in China. Well, up next, Altus Group unveiled its value creation plan at its Investor Day event last week. We sat down with its incoming CEO. That conversation is coming up after the break. Stay with us. Altus Group hosted an investor day in New York Friday with the main focus on its value creation plan. The commercial real estate intelligence provider outlined new goals, including a dual listing in the U.S. market. Talking more about that is Altus Group's incoming CEO and Executive Chair Mike Gordon.
We provide data, software, analytics, and expertise services to commercial real estate companies, to whether it's the brokers, whether it's the funds, whether it's banking. We do all the valuation for more or less in North America and around the world for these assets. And so we have a really good insight into this asset category.
Okay, let's get into it then, because at this event yesterday, at this Investors Day, Altus says it's looking at a dual listing entering the U.S. market. Tell us how that's going to work and kind of the time frame for that.
So we're looking at that in 2027. So you would ask, why are we announcing that now while we're looking a year out? So there's a lot of work that we're doing with the business. Currently, about 60% of our revenue comes from the U.S. market. And additionally, as we go forward, we're also trying to simplify our portfolio. We have been put together over years through a lot of different acquisitions in and around services, in and around the data, in and around the analytics. And what we're doing right now is we've been working to simplify that portfolio and really focus on two core assets. One is the Argus Intelligence platform for commercial real estate. And the second one is our valuation advisory services, in which we have some of the best experts in the world who are trusted advisors to these funds and how we go ahead and give a valuation for each one of these assets. So with that, we're going to be focusing on that in the 26 timeframe, with the idea in 27 that we will then do the dual listing.
Let's talk a little bit more. You mentioned the Argus Intelligence and your focus on Argus Intelligence. What is that?
So it is a combination of three things. We have a software engine that basically does the valuation and does the calculations on any kind of real estate asset that would be out there, whether it is a office building, a hotel, whether it is a multifamily listing, or whether it's a warehouse. So we have that engine working on that. The second thing that we bring up through there on the intelligence side is we bring the data in there so that you can actually start looking at your portfolio and start identifying how is your portfolio doing, with the idea that we can also give you the benchmarks to that portfolio through that information. And now what we also showed yesterday is we showed the new analytics that we're listing. I'm an old analytics guy, and I know I should probably use the term AI, but we did show yesterday how our AI engines and agents would work to our investors yesterday, so that they can see what we're bringing into market now and into 2026.
So that's really the focus, it sounds, going forward. Correct me if I'm wrong, that kind of that artificial intelligence, the Argus Intelligence, and trying to ramp that up in the future?
It is. And for us, it's like really bringing all three of those things to the market, including the advisory services that I talked about earlier, as well as really starting to hone that market in North America, but also look for opportunities to grow that market in Europe and in Asia as well.
Your company also looking to accelerate the buyback of shares. What's the reasoning behind that?
Well, I think we feel like we're the best asset in commercial real estate right now. A couple years ago, as we started simplifying our business, we got rid of our tax business, and that was done, and we had a good amount of cash on our balance sheet. And quite frankly, as we've been looking around at things that we would want to invest in, we came back, talked to our investors, us as a board, we sat back and said, you know what, our best investment is in us. So we decided that we would accelerate that plan, really starting next week and going into next year.
Also at the Investor Day yesterday, your company has a lot of new things going on. You're also focusing on becoming a Rule 40 company. That's one of your goals for 2027, I believe. So can you talk a little bit more about how you're planning to get there?
Yeah, so I think, we did make quite a few announcements yesterday. It's kind of a good investor day when you do that. So we're doing it in twofold. One is we are going to be a company that we want to get to double-digit growth in our core areas. We think we'll be at high single digits soon enough. But really what we're doing is we're simplifying the business. We feel like we're going to really rationalize our cost model. And we really feel like that our EBITDA numbers will be, north of 30% very quickly in the 2026 timeframe, with the idea that, like, as we start introducing these new products and the add-ons, we'll see that growth happen really quickly thereafter.
You must have some challenges that you're going to try to have to deal with over the next couple of years, right? Like commercial real estate is not without its challenges, that industry. What are some of the biggest kind of headwinds you're facing?
Yeah, and I said this yesterday, and I may regret it with the investors in the room, but I try not to let the team think that the market's going to be an issue for us. As a software company and a data and analytics company, our job is to provide solutions that will be great in markets that are thriving or in markets that have headwinds. So from our view on things, I think that what I look at in the industry, if there's anything, forget the market, is that sometimes you have longer adoption cycles. And so especially for some of these new products, we had a couple of customers speak yesterday at our event, and they're excited for the AI, but they'll admit that they're like, I'm a property guy for the last 25, 30 years, and they're very excited about it, but that we have to help them figure out where that comes. So I think that as the team has been working through this, and we've sat down and talked to our customers, we have kind of mapped very closely where this stuff will happen. It's very easy to talk about analytics and AI, but we're also showing them quantitatively where they should be able to get the value for this. So if we get that right, I think we can overcome those headwinds.
That was Altus Group's incoming CEO, Mike Gordon. That's it for us here on The Street. Roger Peterson is up next with The Open. The market's opening just over 30 minutes from now. Thanks for being here.